In 2017, Steinhoff admitted to accounting irregularities that revealed a €10 billion fraud, wiping out 85% of its market value in days. In December 2017, the world discovered that one of the largest furniture retailers on Earth was essentially a fiction. Steinhoff International, a global giant with over 12,000 stores and 130,000 employees, admitted to accounting irregularities that would eventually be revealed as a €10 billion fraud. In a matter of days, 85% of the company's market value vanished. For the investors and pension funds that believed in the empire, the collapse was absolute. To understand how this happened, we have to go back 1964. Steinhoff was founded by Bruno Steinhoff in Westerstede, Germany. In the early days, the business model was straightforward. Bruno sourced furniture from communist countries in Europe and resold it in Western Europe. It was a simple arbitrage play, but the trajectory changed in 1997. Steinhoff acquired a 30% stake in Goma, a South African furniture company, and merged them a year later. In 1998, the company moved its headquarters to South Africa to take advantage of lower production costs and went public on the Johannesburg Stock Exchange. This is where the story shifts from a simple retail business to a global conglomerate. Enter Markus Jooste. Jooste was the charismatic CEO who transformed Steinhoff from a modest furniture retailer into a global powerhouse. Between 2000 and 2017, Jooste led an aggressive acquisition spree. He completed over 60 acquisitions across Europe, Africa, Australia, and the Americas. He brought in Conforama, the second largest furniture chain in France, and Mattress Firm, the largest mattress retailer in the United States. By 2015, Steinhoff acquired Pepkor, a South African holding company focused on low-end retail. This was a $5.7 billion cash and share deal. It made Chris de Wyss, a South African billionaire, the largest shareholder and chairman of the company. To signal its global ambitions, Steinhoff moved its primary listing to the Frankfurt Stock Exchange in December 2015 and established a Dutch holding company in Amsterdam. On paper, Steinhoff was a miracle of growth. By 2017, it reported annual revenues of €18 billion. It was the second largest furniture retailer in Europe, trailing only IKEA. But the growth wasn't coming from selling more sofas or mattresses. It was coming from the ledger. Here is the mechanism of the fraud. A forensic investigation by PwC later revealed that Steinhoff had fabricated approximately €5 billion in fictitious or irregular transactions over more than a decade. The core of the scheme was a web of off-balance sheet entities. These were companies that existed on paper, often in offshore jurisdictions, which appeared to be independent but were actually connected to Steinhoff insiders. Management used these entities to perform what is known as round tripping. This is a process where a company sends money to a third party, which then sends it back as revenue. It creates the illusion of legitimate business activity and profit where none exists. They also use these shells to inflate property valuations. By artificially hiking the value of assets, they could justify larger amounts of goodwill on their acquisitions. This made the company look more valuable and its acquisitions more successful than they actually were. This was possible because of a massive gap in corporate governance. Steinhoff was a dual-listed company operating across multiple jurisdictions. The group auditor Deloitte evaluated the consolidated holding company under Dutch law. However, the individual subsidiaries were audited by separate regional firms. Management exploited this structural blind spot. They generated fictitious revenue at the intermediary holding levels through the offshore network, and then allocated that money downward to artificial operating units as contributions. Because the regional auditors only saw their specific slice of the company, the fraudulent revenue escaped their perimeter. The consolidated view provided by the group auditor didn't catch the fabrication because the pieces fit together on the surface. For years, this worked. Elite analysts, global underwriting banks, and a board that included 3 accounting PhDs all signed off on the numbers. The empire grew because the numbers looked perfect. Then, in late 2017, the house of cards collapsed. The catalyst wasn't a whistleblower, but the auditors. Deloitte refused to sign off on Steinhoff's 2017 financial statements. On December 5, 2017, the company released a bombshell announcement. CEO Markus Jooste resigned with immediate effect. More importantly, the company admitted that its previously reported financial statements could no longer be relied upon. The market reaction was instantaneous and violent. Steinhoff's share price plummeted by 85% within days, with approximately €12 billion in market value were wiped out. In South Africa, the impact was a national trauma. The company was one of the most widely held stocks in the country. South African pension funds had massive exposure to Steinhoff. The government employees' pension fund alone lost billions of rands. Retirees who had relied on Steinhoff holdings for their income saw their life savings virtually eliminated. Chris de Wyss, the billionaire chairman, saw roughly $4 billion of his personal wealth vanish. He later filed lawsuits against Jooste and other executives to recover the losses. Markus Jooste became the face of the scandal. He faced criminal investigations in both Germany for tax evasion and accounting manipulation and in South Africa for fraud. For years, Jooste denied knowledge of the fraud, claiming he was unaware of the fictitious transactions, but the legal resolution never reached a courtroom. In March 2023, just days before he was scheduled to appear before South Africa's financial sector regulator, Jooste was found dead at his Cape Town home. His death was ruled a suicide. For many victims, this meant that criminal accountability would never be fully realized. Steinhoff itself spent years in a grueling restructuring process. In 2021, it reached a global settlement providing €143 billion in compensation to stakeholders. While this was the largest settlement in South African corporate history, it was a fraction of the total losses. In 2023, the company was officially delisted and rebranded as Ibex. The final chapter closed in July 2025, when Ibex sold its remaining 32% stake in Pepkor for $1.6 billion. This divestment marked the end of the retail empire built by Jooste. Steinhoff serves as a stark reminder of the dangers of the roll-up strategy, growing a company primarily through rapid acquisitions. When a company's structure becomes too complex for any one person or auditor to see the whole picture, and when power is concentrated in a single charismatic leader, the ledger becomes a place for imagination rather than accounting.